Hi there, welcome to Kneppy Invest, and welcome to the final trading day of the week. We have about 2 hours left of trading. Time currently is 2:16 p.m. and I suppose red is the name of the day. Everything is down. The ASX 200 down 1%, all odds down 1%, small caps down 1.16%. Tech has had not as bad day as the others, only down 0.57%. And mining or resources down 1.65%, which makes sense because one of the first things I do when I wake up is I have a look to see how the markets have performed overnight, including commodities, and I just saw an absolute sea of red across indices and commodities. I think maybe cocoa was up, natural gas was up. That could be about it. So let's just have a quick look at the markets right now. So the Nasdaq was down only 0.48%, which probably explains why ASX Tech has not had a as bad day as the rest of the market, because the Dow Jones Industrial was down 1.29%. Gold is down again. Now the day has flipped over to a new day, but gold had a really good day a few days ago, but has now seen 3 down days in a row. The big surprise for me was copper. Copper had a really bad day yesterday, down 2.93%. And in fact, this copper chart looks a little bit more negative right now. It's found a new lower low, and the most recent high was lower than the previous high, which means technically copper is moving into a down trend. Yes, a down trend. But yeah, you can just see a sea of red here. Bitcoin is a little bit up. Copper's up today, but that's because it had a bad day yesterday. And a little bit more green as we go down. Oh, that's right. Bonds were up. Yeah, bonds were up. But otherwise, yeah, there's cocoa up 3.77%. All right, so what's the agenda for today's video? Fairly similar than all the other videos I've ever done on this channel that titled ASX Daily Rundown. Go through the best and worst performing indices, sectors, and companies. No tweets. So we'll start off with that ASX today, and then we'll have a look at the top 5 stocks of the day. And I did cheat a little bit with number 5. I've included 3 companies in the number 5 slot. That's because they're all retail companies. Well, one of them, yeah, but they all released positive trading updates. In fact, over the past maybe week or so, most of the retail companies that have released the trading updates were positive. Yeah, so another positive day for retail, discretionary retail. I'd say, yeah, both of these, or 2 of these were definitely discretionary. Maybe the other one, yeah, yeah, maybe. So we'll have a look at that. And then we'll have a look at some charts and some of your comments if I have time. So I do really want to talk about or discuss or question or answer some of your questions, your comments. So let's get stuck into the ASX today. So we already know it's down big. And is down 1% big? That's a good question. Now, the most important thing is, if you have a look at this graph, it hasn't been persistent. The selling hasn't been persistent all through the day. That's when it's bad. Now, today, it really was the opening, and since then, the market has gone sideways. I would prefer a little bit more buying coming in to force the indices up, but it's gone sideways, which is not a bad thing. The only reason we're down, to be honest with you, is because the American markets and commodities were down in the past 24 hours. So let's have a look at the sectors. I'm a little bit surprised one sector is up, telecommunications up a little bit, but mining, the worst performing sector, down 1.67%. Well, they call it materials. And the only sector that is not down by more than 0.5% is telecommunications. So we're talking about Telstra, maybe Aussie Broadband. Telstra, Aussie Broadband, and a few others in there. Let's have a look. Telstra, REA Group for some reason, Car Group, TPG Telecom, of course, SEEK, Spark New Zealand, Chorus. If you look at the percentage change, I'm not sure. The Aussie Broadband's had a pretty good day. I'm happy with that. Some of these, I'm not sure if you could say they're in the telecommunication space. I'm just not so sure. Anyway, let's go back to the indices. And again, a sea of red, gold down 2.1%. If we look at all the indices, I suppose 1 or 2 are up. including the telecommunications or communication services sector, which is up 0.23%. And that's the only indice that is up today. Not sure why there is strength in that area, but there is. Okay, so let's have a look at the ASX 20. Just want to see which companies within this sector or these biggest companies on the ASX have done today. Down 1%. We already know Telstra's up. So if we have a guess of how many companies up, how many companies down, I am going to say 3 up, 17 down. 3 up, whoa, 4 up, 16 down. So not as bad as what we might have expected. I'm assuming most mining companies are down, energy companies down, and I would say maybe WiseTech has had a nice little bounce because they were down over 6% yesterday. Telstra, REA Group, was REA Group up? But I can't remember. Telstra, REA Group, WiseTech, and we'll just say, I will just say Aristocrat because I can just see it here. Okay. So which companies are? Oh, QBE Insurance, Telstra, Aristocrat, and WiseTech. I did get 3 of those right. REA Group is not down by that much. And the worst performing companies, Fortescue, BHP, and Rio Tinto. There is a common theme between those 3 videos, between those 3 companies. Iron ore. Can't remember iron ore being down all that much. Yeah, I'm not sure why. It's not down all that much over the last 24 hours. But for some reason, the market just doesn't like iron ore today. And then we have ANZ, Woodside, West Farmers, National Australia Bank. So some, yeah, and then Commonwealth Bank of Australia, all down by over 1% today. Okay, so let's get to the best and worst performing companies on the ASX. And coming in at number 1 by percentage change is Clean Space Holdings. I don't remember an announcement from this company. They did release an announcement a few days ago, and I did feature this company in my ASX Daily Rundown video. So and turnover's not that big. So let's have a look at Clean Space. What's going on here? In fact, they're in a pause in trading. I would say because there's no announcements released today. They released a sales update on the 16th, which would have been 18th, 17th, 16th, Tuesday. And this could be just trading. I don't know. I would say this pause of trading is the company has received a price query from the ASX, trying to understand why the share price is going nuts today. So let's just have a quick look at Clean Spaces chart. Because if I remember correctly, share price was going sideways, was in a nice consolidation phase. And yeah, for some reason, share price has just exploded today. There could be some reasons out there. There could be rumors about a takeover. So what I'm going to do right now is I'm just going to Google Clean Space. Just see if there's any news flow. Is that the company? Don't see any news. Doesn't mean it hasn't happened. But there's something happening, and we'll get an understanding on why the share price might have risen today through the company's please explain reply. So that's Clean Space. Interesting day for this company. Now, to be honest with you, the share price didn't open high. It's just been rallying through the day. So if you have a look at the 5-minute chart, yeah, it happened. Yeah, buying started. Yeah, it's a weird one, this one. I reckon some day traders have just seen the share price starting to rise, and this has just become a plaything for day traders today. So no real explanation, and when I can't find an explanation for why the share price might be rallying like this, I just leave it on the side. I don't ignore it, but I definitely won't take position in Clean Space because of what's happened today. No way, Jose. Fin Gold up 34.62%. On pretty high turnover, so there's a chance this is on the back of an announcement. So let's have a look at Fingold. Can't remember this company releasing an announcement, but just because I can't remember doesn't mean they haven't, because it's probably drilling results. There we go. New high-grade gold discovery at Golden Ridge, northeast Tasmania. Not even going to open it up. They released a few announcements in the past 2 months in regards to some of their projects in northeast Tas. I'm assuming this is Tasmania. In fact, they seems like they have a few projects there, including Golden Ridge. So let's have a look at the chart for FG1. Is this a chart to get excited about? Well, instead of focusing on the 5-minute chart and just looking at the 5-minute chart, there has been a bit of a sell-off today. Share price got as high as 4.6 cents just after open and has pulled back to 3.4 cents. So let's have a look at the daily chart. You've got to see that, yeah. No reason to get excited, and a lot of selling has come in today, and we can understand just by looking at this chart why there's been selling today. It's all those shareholders who bought high prices, have seen the opportunity to get out today. Fairly similar chart, fairly similar than what we saw, fairly similar day than what we saw on the 21st of May 2024. On that particular day, share price rallied 25.9% and then fell after that. So I'd say that's going to happen again. Now, in saying all that, I'm looking for patterns, and I'm just going to put this into my high volume spec. Now, I can probably guess what's going to happen after this in the next few weeks. The share price will start to drift back, but doesn't mean it will. So I'm going to put that into my high volume spec, and I just want to see how the market reacts and how the share price performs over the next few weeks, because it could be a pattern that doesn't make sense. So that's Flynn Gold, company I've never really heard about. Otherwise, if you go down a bit below that, we have companies trading on fairly low turnover. However, company coming in at number one in my top stocks of the day, Mayfield Group, is up 17.5%. Fairly low turnover, but that company does have naturally low turnover, so that's understandable in my opinion. But the company did release something interesting today, which I want to discuss about. Now, I might be a little bit biased because I am a shareholder of this company. Anyway, so a company I'm trading, Keely Resources, up 14.8%. Happy with that. CTI Logistics, up 12.2%. Another company that made it into my top 5 announcements of the day. Coming in number 3, a company with a similar T code, CXL, and always mix them up. Calix also released an announcement today, but it did not make it into my top 5. So I might have a look at that company when we go through the chart section of the video. And otherwise, nothing else there. By market cap, we have Clarity Pharmaceuticals, pretty good. Droneshield, up almost 10% today. And I will want to have a look at the chart for that company because I think the bounce is happening. I thought it's been, I could see it sort of happening, on the verge of happening over the past few days, and it's finally happening today. Universal Stores did release a trading update today, and that day did make it into my top 5 stocks of the day. One of those retail companies that came in at number 5. Electro-Optic Systems, another pretty good day for that company. Well, it's on a nice little tear. Des did not release an announcement that I remember. So this could be just the market realizing that maybe it's not as bad as what we'll be thinking in retail. So the company did not release anything today. In fact, they haven't released anything for 3 months. But their share price, that company's up 4.4. Capital Health is merging with Index. Is it Index? Capital Health is merging with, is it IDX? What's the company name? IDX. He's merging with IDX, and that company is called, I'm pretty sure Index is not, I'm pretty sure that's a mining exploring company. Integral Diagnostics, that makes more sense. And that's probably one of the reasons why Capital Health is up 5.9%. Demerix, another nice little bounce. Let's have a look at the chart for that company. Also, we'll have a look at the chart for Findy, up 6.9% today. And Michael Hill Jewelry, Michael Hill International, up 6.5%. Another one of those retail companies that released a positive trading update. They released it last night. And Imricor's doing a capital raising, up 4.2%. That's interesting. Okay, so let's have a look at the worst performing companies on the ASX. And at number 1, we have Warriedar Minerals. Says it's an ETF. Let's just open up this. It could be down 90% for numerous reasons. It could be some sort of, what do you call it? It's listed. Warriedar Minerals has listed on the ASX. Not sure why it's saying it's down 90%. If we go to ODL or ComSec, what's the ticker code? ORD. This is their first day of trading. So the share price is not down 90%. I would say the share price, the offer for this IPO was about 20 cents, which makes sense. That's the normal price for IPOs, 20 cents. Not all of them, but that's sort of the normal price for these type of companies. So let's just ignore that from a market index. They're on a little bit of a bit of a bender overnight. And otherwise, lifestyle communities down 13.2%. Company coming in number 2. We'll talk about why lifestyle communities share price is down a lot. And this should be sort of a warning. Just because share price has decreased a lot and the valuation of the company has dropped a lot, doesn't mean the company is cheap. This is what could happen. Lifestyle communities, another bad day. And otherwise, nothing much there. Let's have a look by market cap. Metals X, I did notice tin was down a fair bit. 29 metals, yeah, that's copper down a fair bit. Quantum graphite, I suppose graphite's down a fair bit. Acton Engine, Smart Parking, FBR, Titomic, quite a few of, what do we call them? Momentum companies. Share prices have been on a bit of a run lately, are pulling back today. And that's just probably a bit of fear within that sort of community, that sort of trading community. Bit of fear there. They're more fearful than anything. And that's it. There's Australian Gold and Copper. I've been following that share price of that company for a few days, and share price keeps dropping. Okay, so let's get into the top 5 announcements of the day. Now, some of the companies that did not make it, and I'll just have a quick look at these companies when we go to the chart section of the video. So we have AMA Group. They're doing a couple raising, and I do want to discuss that company briefly. So wait until the chart section of the video. A company called Yancoal released their quarterly results. Beach Energy, Whitehaven also released their quarterly activities report. Australian Ethical Funds released their monthly update or something. Calix released something today, but I think they're in a trading halt. So I'll have a quick look at the trading halt for that company. Also have a look at the chart. Motio, which I've mentioned a few times in the last week, they released a presentation today. Had a look at the presentation, and yeah, it's an interesting company, I suppose. Neuren Pharmaceuticals released also an announcement today. So we'll have a look at how the share price has performed today. And then we'll have a look at Droneshield, Electro-Optic Systems, Demerix, and Findi. All 4 of those companies I actually do own. Okay, so let's get to the top 5 announcements or stocks of the day. And we have, coming into tie number 5, we have 3 companies. Those 3 companies are Adore Beauty and Universal Stores. And what's the other one? Michael Hill International, not Jewelers, International. So let's start off with Adore Beauty. And the common thing you'll notice about these 3 companies, share price is up by more than 5%. So Adore Beauty released a business update. And this was a positive business update. Not the sort of company I probably would be attracted to not because of what they do. I would never use this company at all. I just don't know or understand or think this business model will be a raging success. They do have revenue of nearly $200 million annual revenue. That was up 7.4%. Returning customers, 519,000, up 5.8%. Active customers, 814. Oh, okay. I'm trying to think of the difference between returning customers and active customers. Well, returning customers, yeah, I'm not sure. They do have a definition somewhere here. Okay, returning customers are customers who have placed an order in any period prior to financial year 24 and repurchased in the period comparison to financial year 24 to financial year 23. Active customers refer to customers who have ordered in the last 12 months. Okay, so active customers could include new customers. Okay, not sure. Oh, I stupidly closed that. Not sure I would. Yeah, at least both of those are increasing. Active customers up 1.6%, and EBITDA margin between 2.2 and 2.5%, which is probably what you'd expect for this company. They exist on really low margins. And that's one of the reasons why I would not be that interested in this company, because they're not really selling anything of their own. They're selling other products. Or maybe that's not true. Maybe they do have their own products and they are selling those. But if they do sell their own products, that would be on much higher margins. They made an acquisition apparently. But anyway, the market likes it. So share price up 5% or so. And the chart is probably, in this case, probably the most important thing. And when I look at this chart, I go, no. So the share price wasn't nice developing or trying to develop into an uptrend back in late 2023, early 2024. But then the share price went from almost $1.50 down to 80 cents, almost halved in a fairly short period of time. So a fair bit of volatility for Adore Beauty. And this sort of day, I'm not interested because there's a lot of overhang, a lot of resistance of shareholders who bought at high prices. And I'd say the share price of this company is going to have lots of trouble going on a run from here. So this is not a breakout for Adore Beauty. Let's see if Michael Hill Jewelers or Michael Hill International is a breakout. Share price at 57 cents, up 6.5%. Trading update at 5:34 p.m. last night. I was a little bit, what's the word? I was skeptical this would be a good update because they released it after trading had finished for the day. And based off probability, if a company releases a trading update after closing, it's going to be negative. Not always, but a lot of times it's going to be negative, trying to put it out there after the market has closed on the hope that everyone misses it. But of course, no one misses it. And this was actually pretty good as well. Obviously, share price is up. And the thing I like, again, it's this second paragraph here, which is really interesting because they start off pessimistically. Challenging retail trading conditions have continued throughout the year. And I went, oh, this is going to be negative, with macroeconomic forces impacting the discretionary retail sector, and in particular, the fine jewelry category. So if you're not fine jewelry, then maybe you haven't been as impacted. And then they go into the however, and this is where it gets interesting. However, recent trading performance has seen positive sales momentum across all markets. They have three. What if they mean across all geographical markets? That's what I'm assuming there. And those three geographical markets are Australia, New Zealand, and Canada. I wonder if they have any plans to try to expand even further. And the CEO of Michael Hill, and his name is not Michael Hill, it's actually Daniel Bracken, also mentioned, where is he? And he also mentioned, talking about Canada, that Canada was really good. Yeah, Canada was quite pleasing to the, talked about Miranda Kerr. So Canada was quite pleasing. So this is the segment figures in local currency from last year to this year, 26 weeks. And yeah, Canada was up 1.6%. Australia was up 14%. New Zealand struggling down at 12%. I'm not sure why there was no mention of Australia. Was there a mention of Australia or just missed it? Let's have a look. No, they were just particularly pleased about the consistent performance of their Canadian businesses or business. Anyway, so let's have a look at the chart. Is this a breakout for Michael Hill Jewelers? I'm not sure why. Actually, I do know why that popped up. Michael Hill International. Always gonna say jewelers. And no, nice little short-term uptrend. Share price has gone from 40 cents to 57 cents. So it's almost gone up 50% in a fairly short period of time. Now, I still would not say this is a breakout just yet because the most recent negative update was on the 20th of May. So not that long ago. So it's gone from negative to positive. So probably want a little bit more confirmation things are turning around for this company. And if we have a look at the weekly chart, the share price of this company got as low as about 25 cents back in 2020 and on a beautiful run. In fact, I did trade this company back in late 2020, 2021, just because it was in a nice uptrend. And then the share price reached its peak on the 4th of January, 2022 at share price greater than $1.50. So the share price has almost decreased 67% or 2/3 since then. And potentially it's starting to turn around. Just potentially at this point in time. But yeah, just potentially. I'm not going to call it just yet. I think it's just potentially. So that's Michael Hill International. Yes, I got it right. The other one was Universal Stores, up 5.6%. So another positive trading update. And they also included guidance. This was pretty good as well. And I didn't see anything really negative. Strong trading performance exiting financial year 24 with momentum continuing into July 2024. And all these numbers are up. Group sales up 9.7%. Universal Store like-for-like sales growth negative. That's one little negative, but 0.3%. Perfect Stranger like-for-like sales up not 7.3%. Cheap Thrills Cycle retail and online like-for-like sales growth 4.6%. And CTC wholesale sales growth of 5.4%. Underlying EBITDA expected to be between 46 and 47 million. Last year was 40 million. So this company has grown. In fact, EBIT has grown by about 15%. And end of cash, 14.3 million at the end of the year. So this sounded quite good. In fact, the CEO, Alice Barbary, says they're really pleased to have delivered significant growth in underlying EBIT, 15%, versus last year amidst a backdrop of a cost of living crisis, inflationary pressures, and evolving market dynamics. There is potential that those people who are buying from these stores don't really have to face cost of living crisis pressures or whatever, because they're living at home with mum and dad, and they're the ones who are facing the pressures. So that's a possibility what's happening here with Universal Stores. I just putting it out there. I don't know exactly the type of people who goes into these stores. I'm assuming it's late teens, early 20s, that sort of thing. Or maybe it's just late teens, mid to late teens. I actually have no idea. So let's have a look at the chart. And just because I have no idea doesn't mean I won't take a position in the company if they're performing. So let's have a look at Universal Store Holdings. This is a weekly chart. So let's go back to daily. And in fact, the daily chart looks much better than the other two. Share price is in an uptrend, nice little pullback, and share price is getting to the levels we saw back in April and May. So it's around about $5.80. In fact, $5.80 is this area is a fairly important level, and I'll just show you why. So let's do a rectangle, and that's better. In fact, I do have. I'm going to put a rectangle in this area instead of a line. We'll put it like this. There it is. That's a resistance area for Universal Stores. That was the highs we saw back in early 2023. Share price got into this zone in 2024, back in April and May, and then pulled back. And not only that, today, just today, share price moved into this zone and has pulled back. So they have already seen a little bit of selling today as the share price has moved into this purple zone. So if the share price gets above 620, that would be a breakout. So this zone is between about 570, we'll say 580 and $6.20. All right, so that's Universal Stores. Chart definitely looks much better than Michael Hill International and Adore Beauty. Three companies coming in at number 5. Yes, I am cheating. Could decide between the three to come in number 5. Coming in number 4, we have Warriedar Resources. Share price down 10.3%. Now, this is an interesting one. So what company did receive a price query? So we expect CleanSpace to receive a price query because the share price has gone up without any reason. And this company received a price query from the ASX. And here it is. They went into training halt yesterday afternoon. Warriedar is seeking the training halt in relation to an ASX price query. Okay, if you've never heard me talk about a price query, the ASX has 3 questions. Question 1 is, do you have any information that you haven't released in the market that can explain the share price movement? Most of the time, the company answers no, because that is implying that someone has taken this news and bought shares on the market, so insider trading, and that is illegal. So what the company is implying is someone has done something illegal. And whenever I see a company answer yes, well, yes, we have this information, we haven't released yet, I just think, well, we should see some legal action from the ASX or ASIC or whoever does it, but we never see anything come from it. Anyway, it just shows you can get away with information if you have it. Don't do it if you do. And if the company answers, typically answers no, then they skip to question 2. And the most interesting information is in question 3, when the ASX asked the company, well, is there any other explanation to explain why the share price has rallied? And that's when you get some conjecture, some some assumptions or whatever from the company. They will explain in their own reasoning why they think the share price might be rallying. It could be something as simple as a broker released a favorable recommendation in the company, or maybe the AFR released a really interesting news article, or it could be something like you are stupid, ASX. We've released these really good announcements the last few days, and you said they weren't market sensitive, but here's the proof they are. I'm just making that up. But anyway, so today, Warriedar released 2 announcements side by side. 954 DD program expanded and high grade M1 intercept returned, and their response to ASX price query. So let's open up this ASX price query, because this could be one of those rare occasions when the company answers yes in section number 1. And they did. Yes, this company answered 1. Yes. So the question was, is Warriedar aware of any information concerning it that has not been announced to the market, which, if known by some in the market, could explain the recent trading in its securities? In other words, is there loose lips, that sort of thing? And they answered yes. Referred to announcement of today's date. So they were sitting on this announcement. They didn't release it, and someone knew about it and went, "Ooh, I'm going to buy some shares in Warriedar Resource. Share price is going to bounce on this news." And they have to answer yes to, or if they answer yes to question 1, they have to actually then reply to question 2, which is fairly convoluted. And then they don't have to answer question 3, which is usually the other way around. No to question 1, don't have to answer question 2, then try to answer question 3. So what was this announcement? I don't care. A DD program expanded high grade M1 intercept returned. Share price has dropped 10.3% today. And I just think, yeah, it could be absolutely unrelated. Maybe the share price movement yesterday or the last few days had nothing to do with the announcement they released today. Maybe it was just day traders getting interested, and that's all it is. So let's have a look at the chart for Warriedar Resources. Share price in a well-defined downtrend from early 2023 all the way through to sometime within the last 5 months, but the share price has started to move into an uptrend. And that could be the simple reason why people are getting interested about this company. For some reason, sometimes the volume just goes, and I just have to refresh the page. So let's go back to Warriedar with the volume. And the funny thing is, you can see the volume really increasing in April as the share price started to move into an uptrend. Exactly what you want to see. So as the share price was dropping, no volume. The market was not interested in this company at all. And that's why the share price was dropping. There was no enthusiasm from buyers. And typically when there's no enthusiasm from buyers, the sellers eventually, or shareholders, become a little bit, I wouldn't say panicking, but they become bored. They see the share price just gradually dropping and dropping. So you just see a little bit of a supply of shares on the market, but there's no enthusiasm from buyers. And then finally, we started to see the share price increase in March, and then we started to see volume really expand in April, and the volume has remained fairly robust since then as the share price has continued to move up into an uptrend. So this could be a possible buy the dip situation for Warriedar, a company I've never heard of before, but I'm assuming this company recently listed on the ASX because they've got a number in the ticker code. Market cap of this company is only 48.5 million. And all you have to do to know when a company, I'm thinking of Clean Space. And to know when this company lists on the ASX, all you have to do is go to Market Index, press the last button, and they listed, 2011. Okay. So this looks like this is a company that changed its name and its ticker code because it was originally known as Kimberley Rare Earths. So what I want to do now is, when do they change their name? And this is a little bit more work, because what you do is you just go back. Oh, and it looks like they were known as something else. AWV, Anova Metals, which actually I have heard of. So this company was known as Anova Metals as recently as like last year. and they've changed their name. Trying to find when they changed their name. And they changed their name. It must be getting close. And they changed their name. It's getting close. I can just feel it. Oh, they actually mentioned here, Warriedar Resources Limited launched, so in February 2023, so just over 15 months ago. So this is really the first time I've ever had a look at Warriedar Resources. If you go back prior to 2023, that was known as Innova, and then even further back, the company was known as Kimberley Rare Earths. So this can happen to mining companies. They just change their name after a while, and then you get new investors coming on board. So that's Warriedar Resources coming in number 4. Coming in at 3, we have CTI Logistics, up 10.6% on the back of a profit guidance announcement released yesterday afternoon. This is another one that released this announcement in the afternoon. And just like Michael Hill International, it was positive. So profit before tax, 23 million. The profit for the second half of the financial year, and this is probably the most important thing, is expected to be marginally better than the first half and approximately 25% higher than the prior corresponding period, to 30th of June 2023. This results from solid demand across both transport and logistics segments and ongoing margin improvement initiatives, and despite ongoing inflationary cost pressures. So things are moving actually in the right direction for CTI Logistics. Now, talking about loose lips, I actually did have a look at the chart for this company, and I'm telling you right now, someone knew this company was going to release something positive. And I can almost guarantee you, because the share price rallied the last 2 days, up 8.9% on Wednesday, up a further 2.3% yesterday, and just before that, share price was in a downtrend. So this is very close to being a breakout after a long period where the share price really did nothing. In fact, it was just drifting lower and lower. So this is a potential breakout for CTI Logistics. I just don't like how the share price just rallied the last 2 days. It just tells me something fishy was going on with this company, and I think someone knew the company was going to release this particular profit guidance update. That's just based off the chart. It's as simple as that. So that's all I want to talk about CTI Logistics. Maybe Lindsay is doing okay today. Let's have a look at Lindsay Australia. It's up a little bit. So this is another logistics or transport logistics company. And the share price of this company has been a downtrend, but a nice little pullback. Not pullback, nice little rally in the share price the last month or so. So CTI Logistics coming in at number 3 with a positive update. On the flip side, we have Lifestyle Communities. This is definitely not a positive update, down 13.2%. There were some people saying, well, this company looks pretty cheap now, looks pretty good value. And my suggestion to those people would be, well, the share price is a downtrend. And just because the share price and the valuation of the company is lower than it was, doesn't mean it's cheap. It could be cheap for a reason. So Lifestyle Communities was in the press recently because something to do with fees. What was it? They actually mentioned it in here. Lifestyle Communities announces that all forward-looking guidance it has previously provided is withdrawn due to difficulty in quantifying the impact this uncertainty caused by recent media coverage might have on sales or future sales and settlements. And they do, I think they mentioned it somewhere here. Yeah. So apparently, exit fees, they were charging people high exit fees for whatever. And their justification behind that is entry costs are much lower. So it seems like people who are complaining about the exit fees just didn't read the fine print or something. That's what I'm thinking. So recent media coverage largely focused on exit fees without considering the lower entry price that our homeowners typically pay, nor the other benefits we offer. And this is the problem with the media. They get on a topic, they don't really research a topic. They just want to generate some. It's all about conflict, tension, conflict, that sort of thing. That's how they get people to watch. People don't care about or happy stories. They want conflict. In fact, if you read any stories, any novels, there's always conflict. Conflict sells. So that's the problem with the media. They don't really look at the whole story. They just knew someone was upset with lifestyle communities, and there could be simple explanations. It could be as easy as that. And unfortunately, lifestyle community, I'm not saying there is, maybe lifestyle communities did do something pretty bad, but I'm not even suggesting that. I'm thinking the market probably is overreacting a little bit, but just based off this, there is concerns from lifestyle communities management that this media coverage could affect this business. So there could be actually structural issues caused by this media coverage. The question is, how long will this media coverage last? It could be fleeting. And then, if it is fleeting, that's when lifestyle communities would look a little bit cheap or good value. So a lot of questions I have, and the market doesn't like risk. And that's probably one of the reasons why share price one of the main reasons why the share price has dived today. And when you do look at the chart, not for me. Share price has dropped from $19 back in February of this year down to $9.61. So the share price has halved, almost exactly halved, in the last 5 months. And this had been a market darling for a while. A beautiful uptrend. If you look at the weekly chart, a beautiful uptrend. This is a beautiful uptrend. An acceleration in the share price from COVID-19 all the way through to late 2021. In fact, the share price, almost was a 5-bagger during that period. And then, share price has now dropped a fair bit. The last time the share price was this high or was this low was way back in 2020. Funny enough, there is an important level right here. There it is. That's an important level. The reason it's an important level is just prior to COVID-19, share price was on a run and then it pulled back from that level. And then after COVID-19, share price rose this level and then pulled back. So that is a natural resistance. Well, not natural. It is a resistance level because we've seen the share price pull back right on that price twice. Then it went through that price in October 2020. And now it's just around that zone. So this could be a breakdown, a negative breakdown for lifestyle communities. I wouldn't necessarily say this company is cheap right now. We just don't know. And that's the problem with this company. We just don't know the ramifications of this media, of this increased media coverage around the company. In fact, what they could be doing is fair enough, and that would be unfair to lifestyle communities. So that's coming in number 2. We have lifestyle communities. Coming in number 1, Mayfield. Now, I'm a little bit biased towards this company because I am a shareholder. But the share price is up 17.5% today. Not a lot of selling. So the last trade was at 231. What's a little bit ago, but you get hours and hours without any trading. If you bought on open this morning, you've probably already done well, up 10% from open. So what did the company release? Why is the market excited? Well, it's as simple as a dividend announcement. So dividend distribution, and Mayfield doubles the amount of the final dividend. So it's gone from 1 cent to 2 cents, and it makes the dividend yield of this company, was it 4% or something? I think 3 or 4%, which is okay. But the thing that got me a little bit excited about this announcement and why it's a top stock of the day, and maybe why the share price has rallied a little bit, I'm hoping it's rallying because of this, not because, it's a dividend, the dividend has increased, I'm going to have to buy shares it's coming. The thing that got me interested, and to explain this, you have to actually open up the half-yearly report and accounts. So I'll do that first. And what I'm going to do with the half-yearly report and accounts is one thing I wish this company would improve is their marketing, because something has happened in the past 6 months that has surprised me. And you can just see this by the cash on hand. So let's have a look at that's still gone too far. Let's just have a look at the cash flow statement. So cash and cash equivalents at the end of the financial half year, 8.68 million. We'll just say 8.7 million. So that's the number. I'm just writing it down on my hand. 8.7 million. So this is going to become important in a second. So let's have a look at this particular announcement, talking about they're raising the dividend they're doubling the dividend. Okay. So they're delightful. Of course they're delightful. So it has declared a fully franked final dividend of 2 cents. This represents a significant increase because last year was 1 cent. And then nice wording here, our robust business operations. Now this company should have significant tailwinds behind it. So it's electrical stuff. What do you call it? They probably don't have an about section here. Yeah, electrical stuff. Anyway, I'll see if they've got what they do exactly here. It's electrical. No, always put an about section when you release an announcement because it just makes it so much easier for idiots like me to have a look at what your company does. Now, in the half-yearly report, they should have a review of operations, and they do. So they do. Where is it? Telecommunications and power quality products. Blah blah blah. Where is it? Oh, here it is. Principal activities. So manufacturing of switchboards, transportable switch rooms, electrical production panels, provision of telecommunications and power quality solutions, maintenance services of electrical and telecommunication infrastructure. They're trying to focus on the more higher margins business at this point in time. So that would be what was it? Not the telecommunications part, the other stuff, manufacturing, stuff like that. Anyway, so there are tailwinds behind that part of the business. So that's one of the reasons why I took a position in the company. Someone mentioned the company. I had a look at the company and went, oh, there's going to be some really good tailwinds behind this company. But they don't sell themselves. So when I say they don't sell themselves, they released a half-year report on the 23rd of February, then nothing until today. So almost 5 months of nothing. And something must have happened to this company because if we have a look at this particular announcement, let's go back, something interesting has happened. So they talk about their robust business operations have continued to yield strong performance, leading to an unaudited cash reserve of 16.3 million. Okay, so remember, at the end of the half year, they had 8.7 million. Now it's up to 16.3 million. So the cash on hand is increased by $7.6 million in the last 6 months, which is one of the reasons why they've increased their dividend. So I want to know, why has your cash increased 7.6 million in 1 half year? That's what has me interested or intrigued about this announcement. It's not the increase in dividends, it's this sudden increase in cash reserves. Is it just working capital? Is it just an increase in or decrease in trade receivables, increase in trade payables, decrease in inventories, that sort of thing, which would lead to an increase in cash on hand? Or is the companies or is the business really performing well? You're just not saying it to the market. Because I thought, and my biggest concern about this company was they were going to be, because of the significant tailwinds behind the business, they were going to be spending money, a little bit more money than they usually do, and that would have a negative effect on their full year results. Now, based off this, I don't know. So I just like a little bit more communication from the management of this company, sort of like Biome. And I always refer, or not refer, what's the word? I always compare a company like Mayfield to Biome. Biome marketing team is amazing. Just announcement after announcement, just telling the market how they're performing. Record sales revenue, expects to exceed financial year 24 forecast. It could be as simple as that, Mayfield Group. Just tell us how you're performing, and you can just see by Biome's chart, when you do that and your company is performing, this is what can happen to your company's share price and valuation. It could go straight up like that. And I believe Biome's chart looks like this because of their marketing strategy. Anyway, so I just want to know why the cash on hand has increased by 7.6 million. There could be a simple reason, which may not be exciting as I want it to be, but that would be one of the reasons why the share price of Mayfield Group has rallied today. So let's have a look at the chart. Now, this company has been long on the ASX. So, yeah, listed or is backdoored somewhere in November. And if you do look at the weekly charts, share price started to move up back in the middle of 2023. Now, share price was in a nice uptrend. I took a position there. Nice pullback, and looks like the share price is starting to rally again. I'd like to see an increase in volume, and we're starting to see increase in volume, a very subtle increase in volume in the past 6 months, particularly when you compare it to 1 year ago. 1 year ago, very little volume. You can see these little spikes, but that's just one-off spikes. but from day to day, very little volume. But you just see the chart looks differently. The one-day candlesticks look differently than it was 1 year ago. In fact, that was, yeah, 1 year ago. Okay, so no problem with Mayfield Group chart. A good announcement, but cash on hand has increased a fair bit, almost doubled in 1.5 years. Okay, so let's have a look at some charts. No comments, I think, because going on 50 minutes. Let's have a look at some charts. It's going to show you. So AMA Group. So they're doing a capital raising. So doing a capital raising, I would think this is one of the lowest quality companies on the ASX. Smash Repairs. They're doing a capital raising, and probably one of my biggest issues with this company would be their debt. So one of the reasons they're doing capital raising is to decrease their debt. Now, if we go to their quarterly cash flow report, because they did release their Appendix 4C alongside the capital raising announcement, and if we do have a little gander at this, you should be able to see their debt. Now, interesting enough, if you have a look at the cash flows from operating in itself, in isolation, not a bad quarter from MAA Group. So receipts, $262 million in 1 quarter. So again, this company has a really low margin. So if you just extrapolate that for a whole year, $1 billion. In fact, you don't have to do that. You don't have to do that. So $1 billion in receipts for the year to date. But the company was only operating cash flow positive by $39 million for the year, but $27 million for the quarter. My big concern about this company was the interest and the debt. They didn't have to pay much interest, only $8.3 million of interest. Now, they do have some lease liabilities. Here it is, but it's only $7.7 million. So the company actually increased their cash by $16 million in this particular quarter. There could be some seasonality, I don't know. But the thing I always want to look at for these companies is financing facilities. They have almost $200 million of debt. So you have to take that into account. And you can have a look at the debt particulars here. So facility, lender, a lot of lenders here. Australia, New Zealand Bank, NAB, Bank of China, Bendigo Australia Bank, or Adelaide Bank, First Commercial Bank, Perpetual Corporate Trust, blah, blah, blah. Interest rate is BBSY or SY. Yeah. So that's bank bill swap bid rates, I think. Bank bill swap bid rates. Bank bill swap bid rates, yeah. So that plus, where is it? Plus 415 basis points. So it's probably a fair bit. And maturity date 5 years, October 2024, which is not far from now. Anyway, so doing capital raising because of that debt, and the chart looks pretty negative, but the operating cash flow from operations, does intrigue me about this company. If they can maintain that sort of performance over the next year, interesting company. So that's AMA Group. We have a quick look at Yancoal, these charts, because they released their quarterly results. Yancoal had been a nice little still in a nice uptrend. This could be a buy the dip situation for Yancoal. Fair bit of volatility today. Share price opened higher and now is down. So I'd say the quarterly results look pretty good to the market. And then for some reason, there's been a bit of selling during the day. In fact, you have a look at the 5-minute chart. Not sure there's a lot of liquidity for this company. Yeah, the share price actually opened up in the first few minutes of trading. And then almost immediately, share price pulled back. Okay, so that's Yancoal. Beach Energy released their quarterly update. Is this a time to get excited about this company? I'd say no. In fact, I'd say it's almost never time to get excited about Beach Energy, just based off the long-term chart. We also have Whitehaven. So they released, another coal company released their quarterly, and share price has pulled back. In fact, it's been down 1, 2, 3, 4, 5, 6, 7, 8 days in a row. It's fallen from $9 to $8.30. It's in a support level right now, so possibly another buy the dip situation with Whitehaven Coal. Australian Ethical Funds. I'm going to say evolution there. Australian Ethical Investment released their quarterly, or actually their monthly update, I believe. Monthly update, because they tend to release monthly updates. Do they release quarterly? I can't remember. And of course, ComSec is not. Yeah, quarterly Pharma announcement. Do they release that every month, or is it every quarter? Seems like it's every quarter. It's interesting because some of the other fundies release it every month. So maybe there's some different rules. Like MFG, it could be just a different business model. They release their funds under management every month. I'm pretty sure Magellan does that. 4th of July. Yep. 6th of June, funds under management. Anyway, but the first thing that really is noticeable when you look at AEF's chart here is it's a downtrend. Well, it's a pretty well-defined downtrend. In fact, you could probably draw a line, almost a perfect line, showing that downtrend. Not there, there. It's almost perfect. So this would be a case of waiting for the breakout if you like it. What else? Calix. Calix, and I always get the ticker codes mixed up. It's CXL. So Calix released, they're getting a grant or something. They went into trading halt because they're in receipt of a grant. I'm not sure this is a good reason to go into a market or trading halt. The award of material funding grant, not the sort of thing that would get me excited. I don't really care about funding grants. But they decided a trading halt is necessary. But if you look at the chart, no interest in this company just now. Now, share price could bounce from here. Maybe this is the low at $1, just above $1, which tends to be a very important support level or resistance level, depending which way the share price is moving. So the share price is at an important level, but chart looks ugly here for Calix. And Motio released a nice little presentation, which I did have a quick look. And of course, ComSec's just being silly. Nice little investor presentation. Probably the most interesting thing about this company is just the increase in interest in the company in the last few days. Massive surge in volume and a little bit of volatility, but the share price is still in a downtrend. And finally, Neuren Pharmaceuticals released, I thought was an okay announcement. Share price is down a little bit. It was something about orphan status of one of their drugs. Neuren receives rare pediatric disease designation from FDA. I thought it was something to do with orphan, but anyway. Share price down a little bit. And really, share price is going sideways, isn't it? After that massive rally in the share price back in late 2023, since then, share price going sideways. And finally, the last 4 charts I want to show you, Droneshield. I'll talk about why I like the Droneshield. Now, that's the weekly chart. No, that's the daily chart. It looked weird. Share price is actually up about 10%. Let's go back. Has it got to above 10%? No, 9 points. It's struggling to get above 10%. So the one thing I'm looking at here is just the 1 minute chart. Could I even look at the 5 minute chart? So there it is. There it is. It really popped up on open this morning. But if you look at the 5 minute chart, it's really, sentiment has started to turn. The short-term sentiment. Yep. So the share price reached the bottom back in around midday on Wednesday. You can see a massive spike in selling at that point. A lot of selling on that day and the Tuesday. And right now we're seeing mostly buying, particularly on open this morning. In fact, the 5 minute chart looks pretty positive. I'd like to see a share price get above $1.92. That would be even more positive. I did take a position late on Wednesday because of simply the chart. I thought sentiment started to shift with Droneshield. Just a small trading position in the company. Electro-optics is bouncing. Just like Droneshield now. So I think Electro-optics has been bouncing for a few days. Well, more like it a few months. Share price now getting back up to towards $2. Last time share price got above $2, nearly capital raising. It was a badly timed capital raising. That's why share price dropped. The share price is recovering now. So no complaints with the electro-optic systems. This is a nice looking chart, particularly when the share price is up 5.7% on an overall negative day. There's strength behind the company. Demerix, another one I'm trading. Share price, beautiful dip. Now the share price is taken off again. And there will be sellers who sold or people sold at below 45 cents who are now saying, oh, why did I sell? Fear got the better of me and I sold on this dip. No reason to panic on that dip. It was on fairly low volume. I'd like to see probably higher volume coming in as the share price rallies. That usually is a good sign that there's a bit of strength in the rallying. And finally, Findy. I was thinking, just thinking, of taking a position or adding to my position in this company with this little dip. A 3-day dip. Share price went from about 480 down to 420. And we have seen the share price rally 7% today. It was a perfectly timed rally because whenever the share price of this company falls into this this shaded green or green shaded area, which is the short-term moving average channel, share price rallies. It's a good time to buy. Buy the dip is the name of the game with Findy. Okay, this video has gone on just over 1 hour, so no comments, no questions. But if you do have any questions, any comments, I will eventually get to it. So leave it in this particular video, comment section of this video, and I will talk about it or answer your questions. Talk about any companies you want to talk about, that sort of thing. So yeah, do it if you want. If you don't want to do it, it's okay as well. Last thing I should mention is I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for the video. Have a good day. Bye.